our kind and our type to be able to operate very well in terms of correspondent banking and assisting yourselves to be able to do your business out there in the world. That has now been lifted, and we're grateful that the government of the country did all they could to ensure that that happens, and we're very happy about that. Now, this COVID thing, if we should look at it in terms of the impact on the business, remember that there were supply chain disruptions, right? So basically, supply chain disruptions affect the businesses that we partner with. It affects yourselves in terms of getting what it is that you guys require. There were movement restrictions that affected our clients from being able to do that which they needed. It affected smaller businesses in particular from being able to operate as they wanted to. And those impacts were real. Those impacts led to low business momentum. And even as we come out of COVID, we are coming out a little bit shy in terms of individuals. When I look at all of you guys, 99% of you are wearing masks. We're still shy of coming out very, very clearly and starting the movements as you want to, and starting to do that which you may be wanting to do, which demonstrates what happens in the market, right? So there will continue to be that apprehension in relation to the possibility of another variant coming along and all of those issues. And so momentum has been low. Therefore, productivity will be low. We had to learn new ways of working. We had to basically, at certain points, get everybody as much as possible working from home, except for the branches. At another point, get 50% working from home, while the other 50% is back at the office, and learn how to be able to make this work. So that was quite affected. Significant sectors of the economy were affected. As you know, the supply chain disruptions basically meant that your diamanteers could not travel to be able to view the diamonds in the country as they used to do. Therefore, the site has to be sightings that the US holds had to be liberalized in order to allow for that to happen in a better way. So all of these changes had to happen very quickly, and they were in fact impacting not only on the economy but on the business as time went on. And we weathered the storms, as we always do, having 125 years behind you. We weathered the storm, and we were able to come out of it quite strongly. You'd remember that we are international, and the only international bank left in the country now. And therefore, when this COVID situation started, we used our network to be able to get the best practices right very early to ensure that we are able to protect our people as much as possible. We ended up losing one of our colleagues during 2020, I think, and we are quite saddened about that particular loss. Even if it's just one, it is still quite saddening, and we will remember her fondly, right? That's basically the journey that we have traveled in relation to the economy and in relation to what has been happening. And as we thought that this was going to abate and we were going to begin to get things going properly, we get into a situation now where there is a war. And this particular war is definitely going to impact a lot of us. It's going to impact the economy. It's going to impact a lot of industries. Some of the possible impacts which have already started happening is that we saw oil price going to 30%, right, in terms of increases, which is some things that we were not used to. And one wants to say that your oil-dependent industries will suffer the most. Yes, but we're all going to suffer, right? You guys would have seen the price increases that went out last night in terms of the fuel in the country. Our consumers are therefore also going to feel it. And it's not just in relation to the oil, it's also in relation to gas, it's also in relation to wheat production, because these are known for Russia quite a lot, the oil, the gas, and the wheat. And therefore food prices are going to go under pressure as a result. We're going to then see a sustained increase in inflation. We at first thought that this was going to be transitory, right? It was going to happen for some 6 months, 10 months, or something like that, and then move away. But we have seen it sustaining, and we actually think that it's going to sustain for a little longer. And this is going to basically not augur well for the economy as we continue. And as a response, we have seen a lot of central banks out there in the world hiking their rates, and we're seeing this happening even in economies where we had never seen rate increases in a very long time. And we expect for this to also continue throughout the year with rates increasing. And for our business, one would say that rate increases are great. They will therefore give you a little bit of margin to be able to operate, to work with. But remember that we're talking about our customers here, and we will always be thinking for our customer in every single thing that we do. So basically, I'm just trying to paint a picture of how we are going to be impacted by what has been happening in the world. And we should not try and diminish the significance of the impact that we're going to feel, all of us, as a result of this particular war. Right, moving on. It's been a resilient journey indeed, and the last time I think we had a conversation must have been some 3 years ago before we got into COVID. And at that point in time, we were smarting out of a loss situation that had just happened in 2017. And for businesses to be able to come out of a 200 million pula loss and begin to see the right trajectory, then it means that the fundamentals of that particular business are quite sound. And this is what we are trying to pass out to you, that we've got sound fundamentals. We are able to weather the storms. We will be able to take another shock should it come to us, because we always protect our balance sheet. And our balance sheet is robust and strong enough to be able to deal with all of this. So basically that's the trajectory. Both in terms of profitability, you can see that it's going up. In terms of the returns, you can see that it's going up. And one would say, when the CFO speaks later on, in terms of the 60 million profit that we're bringing to you, right? Is that enough? Are you excited by it? And we will say to you that it is the right direction. That's the most important thing. That's what we want to see. We want to see ourselves going through that particular direction. Remember, when we last had a conversation also, we did say that we want to see sustainable growth, right? We do not want to see a yo-yo. The yo-yo that you saw in 2017, right? Things going all over the place, like we don't have a strategy that is taking us somewhere. We have a strategy, and it's going to be sustainable, and it's taking us to where we want to go. And I'm hoping that you can see the trajectory very, very clearly. We're trying to paint the picture for you from 2014. And you do realize that it's going to take us a bit of time to be able to get anywhere near what we used to do in 2014, because there's been a lot of changes, right? The interest rates have changed quite drastically, and I don't believe that they will ever get back to that particular point. Cost of funding has changed, increased quite significantly. Don't believe that you'll ever be able to get it at the low rates that we used to get it at during those times. And of course, the economies generally have just changed, and we need to be part of those that are carving a way to this future economy that we are all looking out for. Right? Let's just continue. Now, we consolidated a gains in 2021, and this is quite critical, because consolidating a gains basically means that we have looked at everything within the business and said, are things moving in the right direction? And we are quite comfortable, right? And in fact excited that they are moving in the right direction. We have managed to improve our returns by 110 bps, right? That's significant. One may just say that moving from 4.7% to 5.8%, not significant enough, but just wait and see, right? It is significant. Basically means that our investors are going to be able to continue to get the right kind of dividends that we have been giving out throughout this time, right? We want to be able to sustain our dividend payout ratio, and we will be able to do that as a result of the improvement in the returns that we are putting forward to you today, right? Now, we then sat down and looked at our affluent segment and said we need to spruce up and make sure that this portfolio is able to do that which we want. It's quite significant for us, and we have invested quite a lot in it, and we therefore changed things around that. Basically what Setswana that I introduced earlier on is doing is changing the delivery models in relation to this particular segment. She's also brought in unique investment opportunities for you to invest in. She's brought in mutual funds. She's brought in offshore fixed income for you to be able to put your money into the right currencies that you're comfortable with, that are solid enough for yourselves. And this is quite important because a culture of savings needs to be pioneered in this country. And we want to be part of that pioneering. We want to be part of those people that are ensuring that this happens. We need to develop a culture of savings. If you go look at the statistics, we are looking bad in relation to our savings culture in this country. And we do need to change something. This is why we're bringing you all of these opportunities to be able to save accordingly. The third thing that we are quite proud of is that we've got platforms that are agile enough to allow us to be able to respond to the market accordingly. The market was saying to us, we need cardless cash. We call it cardless cash, but it's just a form of a payment system kind of form. We need the ability to be able to take our money even if you don't have our cards. We need the ability to be able to give somebody money even if they don't bank with us. We need the ability to be able to give somebody sitting in Yabana or any other small little place who is able to get to an ATM to be able to get cash from us. And we responded accordingly. And this demonstrates to you that the digital bank that we have come up with, right, is agile enough to allow us to respond to your needs in the market. And that's what we've done. And it's not just that, we're commercializing it. And Bino will speak to you later on when he comes on stage about how we're commercializing it and making sure that it in fact returns the investment that we have put into it. The fourth thing that we did is we pride ourselves in sustainability. It's quite a major thing for us. As we continue having discussions, we will get to it. Sustainability is critical to us, and we have launched our fourth Express Banking Center in the country, launched it in Lobazi, and we made sure that it's green. We made sure that it's sustainable. Right? We have ensured that we use a container that is recycled. We have made sure that it's powered by solar completely. We have made sure that we do dry gardening around it, and we will continue to find opportunities to be able to do this. After that, and we will be launching our mall branch, you know, one of our oldest in Gaborone. We have also done exactly the same thing to it, and we will be launching it very soon. I'm sure that Bami is not going to be that excited at me for having told you this, but we're launching that, and we're quite excited about it, and that's why I can keep quiet about it. That it will also become green, it will also become sustainable. And we're spending money in these things to be able to demonstrate that a bank can stand for good. And that's what we are here about. A bank can stand for good. And this is what we're wanting to bring to you. Right? Now, we've been talking to you guys about the digital bank that we brought through. And we're quite excited that we brought through a digital bank. Basically, Bino will tell you how great this digital bank is and how excited we are about it. I just want to tell you two things about it. Right? For a digital bank to be able to work, it needs to be adopted by our clients. We've managed to make sure that 70% of our clients have adopted this bank, right? Are able to do what they need to do from where they sit. Right? Had a conversation yesterday with one of our clients, and they were saying to me, I wanted to transfer some money, and it's a large sum of money, the app can't do it. I said, boss, this app can do miracles, right? We can do it for you. Called one of our technicians, called this particular customer that's sitting in the Tagani, and I said, call them, tell them that they don't have to go to the bank. They will be able to transfer that large sums of money from their phone or from their gadget wherever they're sitting. And the guy was just amazed that we are able to do that. So as more and more of you guys adopt this and we get more of the other customers out there in the country adopting this, we are getting great financial inclusion. Right? We are being financially inclusive. If somebody sitting in Khansi can onboard themselves into our platforms and become our client sitting in Khansi, and they don't even know any of our branches, but they are able to do that. That's financial inclusion at its best. If somebody can think of any better financial inclusion, please let me know. Right? This is what we want to do. All that they have to do is have this much broadband, and they are able to become a customer. And the government is doing a great job in relation to giving people this much broadband wherever they may be. And we're excited about this because it goes well together in terms of taking our country forward. Right? And then we now get on to the social side of things. We have been working with Future Makers. Future Makers is a program that we've come up with coming out of the Standard Chartered Foundation, where we are able to give back to the community, and we've been able to do that and empowered 2,500 of young entrepreneurs to be able to set up their own businesses, to be able to enlarge their businesses, increase profitability out of their businesses, and be able to participate in this economy. And this we're quite excited about. There will be more coming this year, and we will call all of you again to say that this is what we're doing for our communities, and we're quite excited by the fact that we're able to continue to give back to Botswana. Remember, we've been here for 125 years, and we want to make sure that we can contribute in whatever way that we are able to. Right? Now I'm going to play for you a video that should be able to give you a view of what this plan is about.
Carbon. It's helped build everything we have. But to keep moving forward, we need to leave carbon behind. At Standard Chartered, we believe money can be a force for good. So we're partnering with our clients to transition to clean energy where it's needed most. It's just one of the ways we're creating a brighter, carbon-free future. We're Standard Chartered, and we're here for good.
Great. Quite proud about that. We want to demonstrate that yes, we want financial profits. We want to demonstrate that yes, we are here for shareholder return, but we are also here for good. We are here to be able to change the lives of the people that we do business with, and that's what we stand for. So we want to be able to demonstrate those stands too. Now, leading chapter 3 is a strategy that we have come up with. Basically, to say that things need to be different. We need to create a bank for the future. We need to create a bank that responds to that which our people are smarting from. We need to create a bank that is able to speak to what it is that's important to you. Right? This is the strategy. Now, one may wonder why we're calling it chapter 3. Remember that we started off with a turnaround strategy. Right? Ourselves in the country, together with group, we started with a turnaround strategy. Right? And that which we ran with for a few years. Then we got into a transformation strategy, which we ran with for a few years also. We are now at a point where we believe we need to lead, right? And leading means different things to different people. And we will demonstrate to you what leading means to us in terms of our chapter 3 strategy. We've just seen a video that's talking to carbon, and it's critical. I've just spoken to you about our efforts in terms of reducing carbon emissions out there in the world. And we are quite clear in terms of what we want, what space we want to play in relation to reducing carbon emissions out there in the world. And this just doesn't mean us speaking what we need to do in relation to our businesses that we currently have all over the world in about 59 markets. It basically means that even for our clients, we want to work and partner with our clients to ensure that they are able to go the journey with us in terms of getting there. It means we're beginning to have conversations with our clients that have major carbon emissions to say, let's begin the journey together so that we are able to get there. Right? Quite critical that if we can influence our customers to get them to go there, right? We should be able to do that together with our customers and demonstrate the way to them. And we're not only doing it internally, we're also doing it in discussions with our customers, and of course in partnership with other partners that we have in the market. When we launched the EBC in Lobatse, we had the British High Commission there. When we will be doing the mall branch also, we will have them around also to be able to do this together with us. We will have the government there also to be able to do this with us because it's quite important to our lives and we know that it's important to you. Right? That's basically in terms of accelerating zero, quite critical. Lifting up participation. We do know that we've got those in our communities that are not necessarily getting the full potential that they can acquire, right? And it's important that we play whatever little that we can do to get them up to speed and playing in these economies as they should. And we're targeting women and small businesses. We do know that small businesses are the engine of growth for most emerging markets, not just Botswana. And therefore it's important that we target the small businesses and ensure that they can find their footing and begin to be able to play. Every single time that we speak about small businesses, people think that we're going to go out there and acquire 1,000, 3,000, 15,000 small businesses. That's not the intention. The intention is to work with those that you've got and ensure that they've got the right footing to be able to contribute to the economy significantly. That's what we're trying to do, right? And then researching globalization. I know it comes counterintuitive to most of us that a bank, financial institution, can say that they want to research globalization. But we're quite clear that we want to be able to help companies out there begin to play part in the economy. We've got a lot of corridors that Asuko from our corporate side will speak to when he does a presentation to you later on. We're able to do corridors through into China. We've just launched our renewal offering in the country in recognition of the fact that we are the only international bank and therefore we've got these corridors. We are able to give you, our customers, an opportunity to be able to do business with China, to be able to get your raw materials out of China. We've got many other corridors, like I said, that Asuko is going to speak to. So we want to ensure that there is fairness out there in the world. And this doesn't mean that you're going to see us becoming advocates, you're going to see us becoming militant, running around that we want fair this, fair that. No. The little bit that we are able to play in ensuring that the one who can make a difference is making the difference that they want in the world stage. That's basically what we're wanting to do, right? I'm hoping that that's quite clear. And then the 4 pillars are basically the segments that we've got, right? We've got our network, which is our corporates, but the network is not just the corporates, it's all the 59 markets. It's the knowledge that we have in the 59 markets that we operate in, the knowledge in terms of HR, IT, and all of those things, to make sure that it's strong. We've got the affluent business that you've got there, we've got the retail business, and we've got sustainability, which we've just spoken to, together with the fundamentals that are running across that particular business. I don't want to spend too much time here. All I wanted for you to pick up from this is that we have these 3 stands, right, that we consider to be bold, that we are standing for as a bank. We will accelerate zero, we will lift participation, and we will play a part in terms of resetting globalization. Right, at this point, to take a little bit of a break, I'm going to ask the viewer to stand so that we can get into the financials and discuss them with you. I've been seeing the analysts tearing away at the papers that we've given them, and there must be lots and lots of questions in relation to the financials, and we're quite glad to have a conversation with you about that. So let's get into the financials, and then I will ask the board to do the details, right? I've spoken to you about the ROE that we have done, this one. And I will talk to you about where it is that we want to go, where we're taking this bank later on. We've kept our operating expenses flat, and for those of you that know our model as an international bank, you would know that our model is cost heavy, and therefore for us to be able to keep our operating expenses that flat means a lot. It's a major win to us, and that's the reason why we're talking to you about it. I spoke about our balance sheet earlier on. It has grown by 6% in terms of the deposits, and this we're very proud of, right? We always ensure that we've got the ability to be able to grow, and this is what demonstrates that. Our share price has gained weight, and we are quite happy about this, that it has gained. I think the numbers here are showing 1.96. I think when I looked at it this morning, we were at some 2.01, I think it was. And we are hoping that as a result of what you guys say and what you guys see, it might just tick up a little bit if you guys are enthused with what it is that we're bringing to you. Our capital is stable. The fundamentals are great. We're happy with the 12.4% that we have in terms of Tier 1 and the CAR sitting at 16.4%. I'm not doing any details, just giving you the highlights so that the Chief Financial Officer can eventually then take the details. I'm just making sure that I get that name right. We are comfortable with our CASA mix within the business. We will get into conversations about that to be able to see how it looks between the two businesses. But we're quite happy that we've managed to grow our CASA to 54%. And this took a toll. It took a lot of doing to be able to get to where we're at. And yes, in terms of PBT, you're going to see that it's 25% down. But underlying, as Mpho will explain, you will find that the fundamentals are in fact right nonetheless. Those are basically the highlights that I wanted to give to you in relation to the financials. And are we excited about the numbers that we've been able to post? Yes, we are. Why are we excited about the numbers that we've been able to post? Because they are in the right direction. They are taking us to where we wanted to take this business, right? And we are happy that we are getting there in terms of getting our business to where it needs to get to. Are we ever going to be able to do the 30% ROE that we were doing a lot earlier? Not too sure that we'll be able to do that. The business has changed, but we will be able to get to decent returns for this business and for our investors, and we know that you will be happy about that. Tapiwa, do you want to get into the details now?
Thank you, Masupe, and thank you all for joining us this morning. Good morning to you all. So we came to market with a profit after tax of about 60.3 million, representing a 21% growth year-on-year. Some of the performance drivers driving the profitability this year includes performance on our fee income, which recorded a 3% growth, mainly coming out of the retail segment and predominantly out of the personal and installment loans. Margin income, on the other hand, recorded a 4% drop, reflecting the impact of COVID on our business environment, as well as the low interest environment that we operate in. Overall, top line performance, we ended the year at 739 million from 753 that we reported the previous year. And we believe we are in the right journey to be able to continue driving income performance. Cost performance, on the other hand, was well controlled. We managed to control our costs and contain them to 2020 levels, mainly reflecting the impact of some of the cost containment measures that we put in place in the previous years. Loan performance remains relatively low, reflecting the quality in our book. And as you can see, our loan loss ratio also continued to be around 2% and compares quite favorably with some of the industry averages. Overall profit after tax, as I said, 20% growth year-on-year. Now moving on to the balance sheet, our customer assets recorded a drop of 5% year-on-year, reflecting the PE or period effect of some of our exposures in the corporate segment. But overall, our average utilization on the asset book was relatively high during 2021. On our customer liability side, we recorded a 6% growth year-on-year, and the growth on customer liabilities was really broad-based, coming from both businesses, corporate and our retail segments. From a capital point of view, as the CEO has already mentioned, we remain well capitalized. Our core capital, which is our Tier 1 capital, continues to contribute more than 80% into our overall capital position. Our asset to deposit ratio remains relatively low at around 61%, also reflecting the ability of us to be able to continue to support growth into the future. Now, Masupe, please take us through the journey into 2022-2023.
Thank you, Tabs. Before we do that, what does this mean for dividends?
From a returns point of view, that simply means that we will be able to pay our investors more into 2020-2021.
Right. Let's expect those dividends to be coming through after regulatory approval. I must hasten to add. Now, I do know that somebody may look at that particular slide that says this is the trajectory that we're going with, both in terms of profitability and the returns that we are seeing. And somebody may begin to have a wish that it was a lot steeper going upwards, right? That the curve was going straighter. But there's absolutely no reason for any impatience in relation to that, right? If they are going to be stable, they need to come from the fundamentals of the business, right? If the returns are going to be stable for the long term, they need to arise from the fundamentals of a good business. And this is what we're doing. But now, what will take us to that positive trajectory that we are looking for? We want to continue to be able to deliver sustainable business growth. And to this, we're basically saying that a double-digit ROE will not be a bad thing at all for investors. It will not be a bad thing at all for all the rest of the stakeholders. And that's basically what we are saying that we want to get to. Will we get it? Will we get to it in 22? Maybe not. Will we get it in 23? Possibly. Could we get it a little bit later? I think it might be a lot sooner than we think. But we need to get there. We need to ensure that we bring you the returns that you require. And that's why we are in business, to be able to ensure that we're doing that. That's why we are working with the businesses to ensure that they've got the capability to be able to deliver this business growth that we're looking at. Second thing that we want to do is realize the legacy of the SCB brand. Right? It's been here for 125 years, right? We all know about it. We know this brand when we see it. Our grandfathers and our grandmothers know this brand when they see it, because it has been here for a very long time. And we want to be able to harness the potential that that legacy brings. And you will be seeing more of us in the market as we begin to do this particular work. Right? And here's another thing that demonstrates our mindset, right? We want to build a future-ready workforce. Our mindset is ensuring that we've got a business that's future-proof. We've got a business that's able to go out there and operate for the long run, for the long term. And it needs to be future-proof to be able to do that. And we want to make sure that we've got workforce respond to this, right? Our workforce today are learning digitally, right? Everything. We've got a platform that has got thousands and thousands of training to be able to get our workforce to train as they should. And we want to ensure that they do. We want to recompose how we reach our customers by bringing in universal bankers, as Bino will speak to later on, right? And make sure that one person is able to deal with the needs of the customer that approaches completely and totally. And those are the sort of things that we're wanting to be able to do to ensure that we've got a future-ready workforce. And if there are any more questions later on as we continue, Mr. Mponga is here to be able to expound on it in terms of what is it we're going to achieve. But we're quite excited about what we're doing with our colleagues within the business in terms of making sure that they are skilled up well to be able to operate, not only in the bank. This is critical, not only within the bank, but they should be able to operate anywhere they choose that they want to operate because of the upskilling that we would have done. Right? We'd like to be able to differentiate ourselves through superior service delivery. We do know that we've got the greatest digital bank in this country at this particular point, and I say that with all the confidence that I can master. We do, right? But how long will it last? How long will we be the leading ones in relation to the digital bank? How long will we be the only ones that are offering 74 offerings within that particular bank? How long will we be the one that have got the straight-to-bank next generation in relation to the corporate that is able to do amazing things, right? That's a commodity, right? It can be copied, and it is big. So in no time at all, we will be having people coming out with better things and what have you, which is fine. That's what the market does. Therefore, the only thing that will differentiate us, basically two things, right? It is the service that we offer to our customers. And we are spending a lot of time and money in terms of ensuring that we can differentiate ourselves in relation to that. Second thing is the culture, right? If you go anywhere in this industry, people will tell you that SCB has got culture, and we do. We have a strong culture. We have a culture of diversity. We have a culture of inclusion. We've got a very, very strong and disciplined culture, right? And we pride ourselves in having that kind of culture. And those are the two things that will eventually differentiate us as we continue. As everything else is commoditized, right? These are difficult to commoditize, and it will take a bit of time before people can replicate those. Becoming a truly digital bank. That's our aim. We want to be digital in every single way. We want to ensure that end-to-end processes are digital. We want to make sure that we have automated the backend. We want to be sure that everything within the business itself is digital and automated. We do not want to be able to give you interface, right, that's looking pretty and nice, as our interface is looking right now. Only we want to make sure that behind it there is enough robust, right, systems that can support it going forward. And this we're quite proud of. And to achieve this, I told you earlier on that we came from 54 to 70%. We are now targeting 80% in terms of ensuring that our customers have gotten there. 80% of our customers need to be on our platforms by the time that we finish up this year. And we will be very excited if we achieve this or if we can surpass it. Basically, we want to be able to prove the concept that our people can transact, right, digitally, right? This issue about, no, we've got Botswana sitting there and what have you, they actually can, and they are. When we launched, right? When we launched, we had 3 people onboarding themselves from Radisson. We had a few people onboarding themselves from the 𝐒𝐓𝐀𝐃𝐀𝐃 village also, right? So it is possible that this can happen, right? And these are village people. These are our colleagues, our brothers and sisters sitting in the village. They can, and they will be able to operate. And we want to be able to get to the 80% that I'm talking about. Right. If there's anything that you should leave here with, is basically to say that we want to continue this positive trajectory. We want to ensure that we're able to do more and more every single year. Do we want to do it incrementally? Yes. Do we want to do it incrementally but in larger numbers? Definitely. Right? Do you want to give you a yo-yo type of growth? Go to 300 and then go to 70 tomorrow? No. That's not what we stand for. We stand for stable, sustainable growth. And if there's anything that you take away, it's these 4 things. That we are preparing ourselves for a bank of the future, and we want for this bank to be truly digital. I think that's basically that in relation to the numbers. We will now allow for the business to come through and just give you a flare of what is within each of the businesses and how we're going to be able to achieve the stuff that I've just been talking to you about. Thank you very much.
Thank you very much, Masupe, and good morning. Masupe, I hope I'm not going to spoil the positive trajectory that you've been on. Obviously, a lot which demonstrates the path that the bank is on. Just to give you guys a snip, before I start into my presentation, I just want to share with you something that we're really proud of. It took a lot of time to develop, but it's something that we're really proud of. As Masupe said, we are the business store bank in the market. We're very proud of it. We've been winning that for the last 7 years. And I just want to share some proof points before I go on to explain what it is that we've been doing. Guys, it's not easy to open an account with Standard Chartered. While many of you are going to different branches, paperwork and everything, we at Standard Chartered Bank have none of that. 3 years ago, we only had about 30% of our people using our digital channels. Today, as the CEO has said, over 70% of started using our digital channel. 98% of our people today open an account without any single paper. It's quite powerful. And I think it goes to this theme of decarbonization that we must put in. It also talks to the cost element, that we're able to take our costs. Stationery is one of the very, very heavy costs that sit with any bank in the industry. The fact that we've been able to take all of that out says lots about the journey that we're on. We open an account in 15 minutes. Again, this is coming from an average of 3 to 5 days. I challenge any of you to go into any bank and open an account in 15 minutes. I don't think you'll succeed. What this is giving us, ladies and gentlemen, is an ability to acquire more customers. And as we move forward, you'll see that the bank is going to continue to grow exponentially. The banking population in Botswana is about 500,000. Of that, 60%, 10% of it, which represents about 61,000. These are people who already downloaded our app to interact with the bank. And what we're seeing is, whilst a lot of them are falling off, the interest is there. So we are quite positive that we're capturing the imagination of us all. And we will be able to convert all of that 61,000 very soon, so that these are new entrants into our banking environment. Another thing that we've been called in the past is a bank for the old. I think when I look around the room, probably the oldest person in here, I think this is testament to the journey that we're on as a bank. Today, over 70% of people that are opening accounts with Standard Chartered are people less than the age of 35. I think this is a powerful statement. But at the same time, we are not losing the vintage. These are the people that have been banking with us for years. I see some people in the crowd whose parents have been banking with Standard Chartered for many years, and I'm sure they are not leaving anytime soon. I can repeat them. Yeah. Ladies and gentlemen, what we're also seeing is not just people opening accounts. We are seeing people interact with the bank. We are seeing people funding their accounts. The biggest challenge that many banks face today is inactive accounts. Is accounts with small balances. Most of the accounts that we're opening today digitally are value accounts. An average account today holds about 9,000 worth of deposits. This, even with the people coming below the age of 35. Before I move on, I'd like to quickly just ask Isuko to share some of the proof points that he's seen on his side from a digital perspective.
Business is doing this right now. 19% of our clients are already on a digital platform. This presents to them huge cost benefits, and even to us as an organization also. But the most important thing is that it gives businesses those services that they're not even aware that they need. So you start to provide efficiency into businesses, and we are coming from a very difficult period. So every single penny counts, and that's what digital has done for us within Standard Chartered. Innovation is also very, very important. You have a digital platform that allows you to innovate and respond to your to the market trends and your clients' needs. So it's been a very wonderful journey for us. But I'm sure when you tell us about your 2021 achievements, you'll be able to show us a little bit.
Thanks, Isuko. I'm not going to dwell too much into what we've done, but I'll just take you very quickly through some of the highlights that we have seen. In terms of our asset performance, we achieved a 7% asset growth. In terms of deposits, we grew about 2%. Income was modest. We also saw 7% income growth. And what I'm most happy about with our income recovery is that we saw a 19% improvement in our non-funded income line. And this is quite powerful because we are seeing the dividends of our digital strategy. Because this represents the people who are interfacing with the bank. This represents the transactions that we're pushing. So I'm quite happy with the shape of the business in terms of how we're funded. We've been quite asset heavy in terms of lending, but now that we're having more focus on affluent and more focus on digital as a lever to push transactions, we're seeing our non-funded income grow. Currently sitting at about 38% of our income. We're quite happy that going into 2022, we should move this into the 40% region. Masupe has talked about some of the achievements that we've had on the digital side. Quite honestly, I keep getting a lot of slack. Masupe was talking about the cardless cash. A lot of people were walking up to me and boss, you're killing us. Every time someone wants, please send me some money, they just tell them that I bank with Standard Chartered people were knowing that Standard Chartered doesn't have e-wallet, cardless cash, whatever. But now everyone doesn't have an excuse anymore. So it's something that I apologize to all of you that cannot hide anymore. But I think we're just trying to bring efficiency to the book and to the clients. One of the most powerful things that we did last year was launch our investment products. And I think Masupe touched on a very important thing. Guys, we have a problem in society of indebtedness. I think as a bank, we continue to be proud of being a responsible lender. We are not going to be aggressive in opening up all types of lending into the market, purely because we want to ensure that it's sustainable growth. We don't want to have overnight success. And one of the things that we're really focusing on is also focusing on the savings side. We know that government in the not so distant future is not going to be paying school fees. So how do we ensure that we help us on today banking with us, build for the future? And this is what our wealth proposition is all about. I'll share with you shortly some of the tenets of the growth that we're going to be pivoting on to take the affluent business forward. I think the second last thing that I want to talk about is the efficiencies that we're doing. One would assume that obviously with the cost reduction plan that we're doing, the efficiencies that we're doing, the digital channel is taking away jobs. It's actually not. What we're seeing is today, we were processing paperwork with multitudes of people. You're not just taking photos of all the things that you require to open an account. In the back end, there's people actually looking at these documents to ensure that you are who you say you are. We also have job families that we're redefining. You used to have a teller in a branch who's just the whole day used to sit churning cash. We've now upgraded this role. It's now called a universal banker. And what a universal banker is basically someone who can help you interact with your mobile device. They also service you in terms of all your service needs. Our call center today is not about people just receiving queries about a transaction or I thought there's a suspicious transaction on my account. Today, all of our sales agents at the call center have been trained to be able to sell you insurance products. They've been trained to help you identify sales needs that you want. You could be calling simply about a transaction, but you could walk out of the branch today having procured yourself a life insurance, which is something that is quite powerful. We saw during the height of COVID, a lot of people lose lives. And some of these people were uninsured. But I had one person, to be very honest with you, during the height of COVID tell me that, you know, had I not called your contact center, I would not have had the benefit and opportunity to bury about them. Because it was calling through your contact center that I was able to interact with someone who was able to help me identify that I needed this problem. So these are some of the things that we're really proud of. We are creating efficiency and we are creating bankers of the future. I'll stop here and allow Suko to give us some of the benefits and payoff points that he saw in 2021.
Wow, thanks, Vino. And you know, I started off my career as a teller actually. So I think in terms of looking at evolution, as bankers, we have to evolve. And when I hear you talking about universal banker, it's just really the way to go. But there's another thing that, you know, it's very important, especially for businesses. We have gone through a very challenging period between 2020 and 2021. The whole world has gone through that. But a key fundamental of the business is resilience. And you have to build resilience for the future. And that's what we've been able to successfully do in the corporate banking business. Build that resilience for the future. And remember that we have actually been involved in this business over the years, coming from a very challenging period in 2017. So I'm happy to, you know, when I see the fundamental and underlying performance, we closed the year at a growth of 52% when you look at underlying performance. Obviously, when you take out the one-offs that we had in 2020, which, you know, we had always told it was a one-off, you know, it really talks to those fundamentals. But when we're talking of these fundamentals, what are they? We're talking of consistency in terms of growth, bottom line growth to our shareholders, but we're also looking at, you know, some of the drivers of our business. Operating costs, bringing that down year on year. We've been able to bring out operating costs by 4% consistently year on year. And, you know, within an environment that has been quite challenging, you know, that has been really significant. but we continue to build for the future. And sustainability for this business is quite critical to us. And that's why we're saying that a balance sheet is our greatest asset. And we decided we're going to focus on key drivers, key segments. We're able to grow our security services by 30% year-on-year, especially within a very difficult period. So this gives us very good confidence, and I think the proof of the pudding is the sustainability of this business and this bank into the future. But let's talk about going into the future. What do we have?
Thanks, Mpho. And before we go into what's in the future, I think it would be amiss of me if I didn't share with you a snippet. And please pay careful to the detail in this video, because what I'm going to talk about is embedded within the message.
Can you invest in Fortune 500 stores and more? Can you help the planet and boost your wealth? With Standard Chartered Priority Banking, you don't need to stop and think. Investing with us goes further. We connect with global fund managers, select funds that suit your needs, bringing global expertise right here. We connect you to wealth opportunities that match your priorities. Join today.
Ladies and gentlemen, if you are not a member of our priority business, I encourage you to download the app, open an account in 15 minutes, and start enjoying the benefits that we have. After all, I believe everyone in here still has school fees to pay and many other things to still enjoy in life. The tenet of our strategy is pivoted on two things. We are going to continue to disrupt through digital. And through digital, we're going to bring our participation costs down. And more importantly, we're going to continue driving sustained business performance. The second tenet is we're going to continue differentiating. Setswana, as Masupe has mentioned, is responsible for driving our affluent sector. And when I say affluent, I'm not just referring to the high end of the market. We are referring to servicing our customers through managing wealth management products. And wealth management products, I'm referring to the mutual funds, which are offshore. This year we're going to be bringing onshore mutual funds. We also have offshore fixed income. One of the most important things about what we've done with our digital bank is that you can actually profile yourself in terms of risk appetite. Because at Standard Chartered, we don't just believe in selling to everyone. We need to make sure that the type of instrument that we sell you has sequenced your profile, because tomorrow we don't want you coming to say that you sold me something that I didn't know. So through our digital channel, you're able to profile yourself, and one of our investment consultants is able to reach out to you so that you can plan and decide what type of instruments are correct for you. And we have foreign currency investments. Not all of us want our children to go to University of Botswana or to South Africa. You can choose investment instruments which are dollar returns, sterling returns, which basically helps you build for the future and get that income that you need when you start to participate in sending your kids anywhere in the world that you need to. And I think more importantly, it's inclusive in that some of the tickets are as low as $100, which is 1,000 kula. Some of them go up to 10,000. This allows everyone in the market to participate. We don't believe that people should be constrained to taking home the bare minimum. We want people to actually start investing at bare minimum. One of the things that we want to focus on, Masupe introduced Macmillan. Macmillan is responsible for our mortgages, auto, and the deposits portfolio. I think many of you, when you think of buying cars, you don't think of Standard Chartered. That is changing. I see some people in here that I know very well don't use Standard Chartered to buy their cars. I challenge you that in the next month or two, we will be able to support you. We'll be going out to market with a refresh strategy around mortgages, and I'm quite happy that some of the businesses that have not been doing too well, with the right people, with the right focus, with the refresh that we've done, will be able to help sustain the growth that we want in the business. I've talked about efficiency. One of the things that we've done really well is to make sure that we identify wastage in the business. What are the activities that are cost heavy? I've talked about some of the things that we've been doing. And we'll continue to find ways to ensure that through digitization, we are finding more efficiency in the business so that we are more leaner and agile organization. I think the last thing, as Masupe has also mentioned, we'll continue to digitize. I want this bank to be at least 98% adoption. And I know anyone will challenge to say, but what about my grandfather? Guys, let's be honest. Everyone is using WhatsApp. WhatsApp is powered by data. It's powered by internet. So why can't the same people push transactions on the internet? We are seeing that people are transacting with it. Our branch footfall has gone tremendously down. The transactions that have moved out of the branches speak for themselves. So we're quite confident that the strategy that we've embarked on in terms of leading to digital will continue to be capitalizing the market. But we will continue to have our branch network. We're not going to do away with it. It's a mix of how we want to combine and serve you in the market. So with those 5 tenets, I just wanted to highlight to you what we're going to be focusing on. If there's any 2 things that I want you to remember from here, is we're going to continue to digitize, we're going to remain profitable, and ensure that we serve all our customers, focusing on saving culture and making sure that we're more efficient. Simple, over to you.
All right, let's see what we have in the future.
Get to know the new Straight to Bank.
With new features and a new interface, Straight to Bank is faster, easier, and smarter to use.
It's fully integrated, completely scalable, and provides cash, trade, foreign exchange, and security services on a single platform, giving you the end-to-end solution you need to manage your workflows. Let's switch to Straight to Bank. With Straight to Bank's simplified user interface and intuitive dashboard,
Operating finances and managing approvals, analysis, and forecasting on Straight to Bank have become so much faster, easier, and smarter.
so let's say you're looking for a specific transaction. It's easy. You can customize your view of the dashboard to reports like this, and then just pull up what you want and get the job done.
On top of that, you can easily check your account balance to make sure there are enough funds for payments before you approve them. Straight to Bank is also a single gateway where you can book an FX deal on the go. You can send out trade invoices and guarantees immediately.
And do it in bulk too?
Yes, it saves us so much time.
Perhaps it's time for me to digitize.
And whenever you perform a transaction on Straight to Bank, you'll get real-time status updates as well as alerts and reporting notifications to help you stay on top of things. Straight to Bank also lets you take your work anywhere. Give approvals anytime, anywhere on the mobile app and receive notifications instantly.
And don't worry, with payment fraud monitoring and security biometrics, everything you do on Straight to Bank in and out of the office remains secure. You can also open a new account with safe and secure document submission and access cross-asset research and strategy, including FX forecasts and trade ideas.
Need smarter and actionable insights for analysis and decision-making? Straight to Bank's Enhanced Business Intelligence Analytics feature lets you do that too.
It's incredible. I really need to digitize.
What's more, Straight to Bank's flexible data integration makes it easy to connect other tools in your financial stack.
Oops! Gotta run. Gotta make it before the bank closes.
Faster, easier.
Smarter.
Experience the power of Straight to Bank.
Experience the power. Faster, easier, smarter. This is what we are saying to a client. We're bringing you an experience that is going to differentiate you from your competitors within the market. One thing we're looking to do is leveraging a network, and that's very unique in its sense because we are the only international bank in Botswana, and we have a network of more than 50 locations across the group. So how do we use that as an advantage to you, our clients? One of the things we've already done is to launch the renminbi, as Masupe mentioned, and what that means for our clients is that it gives you not just the benefits of transacting between the pooler and the renminbi, but it also gives you a benefit in terms of cost, right? Because research has shown that that in itself can give you about 5% in terms of net savings just from your current savings. So that is the way that we're bringing our network to a client, and it's a very powerful tool because if you look at the trade between Africa and China, it's about $200 billion, and we're saying we're giving an opportunity to our clients to participate in that. Obviously, China is now the second largest. The Chinese renminbi is the second largest trading currency in the world. How do we plug in, our clients here in Botswana into that opportunity? And that's what we're doing. And there's so many other trade corridors. We've seen within the mining sector a lot of new mines coming on. And we're bringing, banking those Australian mines, Australian operating companies that are coming into Botswana. And we are the largest player in that, and we'll continue to pull that in, just so that we can deepen financial intermediation in Botswana. We're very clear in terms of our strategy. We've seen that pay off as we've gone through a very challenging period. We remain resilient within that period. And so that clarity and the focus, and it's long-term for us, we were able to consistently continue that even within this challenging period. And that's what we're saying is going to differentiate us. That focus, the clarity in the segments that we played. What are the segments? Financial institutions, both financial and non-financial institutions, corporate banking clients, global corporates, and largely public sector and development organizations. I mean, and when you look at Botswana, the government is the largest driver in terms of the economy, and our commitment is that we'll continue to support each of those enterprises that are driving the economy. And we are one of the largest players within the government space. You've seen it, digitization is going to be a clear differentiator, and we're not just talking digitization, but how we continue to digitize everything that our clients do. So it's an end-to-end digital experience, and it's going to continue evolving, right? So what the experience and the transactions that you do today to make yourself competitive are going to change tomorrow. And we are positioning so that you can have the flexibility to do that. You've seen it. Simple, faster, smarter. And I think the most important thing is that we have built the sustainable foundations for growth. We have solid foundations in the balance sheet. We have a high quality book. We have a clear focus on the market segments we want to operate in. We are going to differentiate ourselves on digital, and we are going to grow sustainably into the future. Ladies and gentlemen, we are here for good. Thank you.
Right. If there's two things that I take away without causing a riot, is belong to this bank, if you don't already. Number two is support Liverpool. So those who don't support Liverpool, let's have a conversation. Right, shall we relax and have a conversation? I hope that that clarified a few things for you, and we can now chat about what might be concerning you or what you want to know more about.